Hey guys, this is Ehab. So today I thought it would be a good idea to talk about how you can invest during high inflation periods. Specifically because the US, and most likely the global market as well, because the US leads the global market, but the US currently hits its 31-year high for inflation. So the inflation is the highest has been in 31 years in the US. So let's first talk about what is inflation to begin with, and then we can talk about the steps that you need to take to kind of limit your exposure to the risk of high inflation. So what is inflation? Inflation is a progressive increase in the price of goods and services over time in a specific economy. So when the general prices increase for the goods and services, that same amount of currency is going to buy fewer and fewer goods. So basically, if you think about it, that's a reduction in the purchasing power that you have. That same $100 that you have is not going to buy the same amount of goods and services the next day because it's actually worth less. So the prices of goods and services are higher, and even though your money's still the same, the $100 is still the same, it can buy fewer goods and services. So it's a major concern because it makes the money saved up today worth less and less tomorrow and the day after tomorrow. And that's basically what inflation is. Your money is becoming worth less and less over time. And you really cannot escape inflation because that's simply going to happen whether in the US or any other country. The inflation rate actually differs between one country to another. So some countries can actually manage it and make it, the lower the better. Some countries cannot control it. That's why you have currencies into hundred thousands and millions, sometimes even currencies in the millions, where you see in other countries where they deal in millions. They don't deal in dollars like us in like a single currency. They deal in millions of currencies. That's when you know the inflation has gone up the roof and the value of the currency is becoming worth less and less, where you have to carry a large bag of money to purchase a single, stupid goods or whatever it is that you're trying to purchase at that time. So since you cannot really escape inflation, it's going to happen no matter what. All you have to do is know how to manage your portfolio and your money to know that you're limiting your exposure when it comes to inflation. So if you really don't do anything, for example, even if you're investing your money, that investment, if it's returning for you 6%, let's say, and you're thinking you're making a decent return on investment, after inflation and capital gains tax, essentially you're probably making zero return on investment. If you think about it, that 6% that you're thinking you're getting a return on investment, take out 3%, let's say, for inflation. You're left out with 3% return on investment because technically that 3% got wiped out because of inflation. And then after taking out capital gains tax, you're pretty much left with zero. So you're really not really investing your money. Even though you are investing your money, you're not really getting any type of return on investment. So the first thing you want to do is never put your cash in the bank where you have a large amount of cash sitting around during high inflationary periods. That's the worst thing you can do. Ray Dalio says cash is trash, and I completely agree with him. Cash is trash unless you need it for emergency. So if you have an emergency fund or anything like that, okay, that's fine. You can keep that amount of money on the side just in case you need it for an emergency. But you should not have a large sum amount of money sitting around and you're not really investing it, because that amount of money or cash sitting around is actually going down in value. And even if we did not have high inflation periods, even if it was just a regular inflation, which we all do have it, your money is going down in value over time. So you only want a specific amount of money for emergency funds, nothing crazy, just a 6-month or 1 year worth of your salary or expenses. That will cover everything for you, nothing beyond that. The rest of the money should be invested. As long as it's sitting in the bank, it's probably going down in value over time and it's depreciating, and it's going to be worth less and less over time. The second thing you want to do is, of course, invest your money. So as we said, you don't want anything crazy sitting in the bank account as far as cash. The rest of it should be invested. Now, you have to focus on what type of investment you're getting, because again, we're talking about if at high inflationary periods, you want to get the highest returns. So you don't want anything, medium type of return and you're not really getting anything. And after inflation and capital gains, you're barely making ahead. You want to pick companies that are growing and scalable. And the reason why I say they're scalable, because they can actually grow and also increase their prices during high inflation periods without losing their customer base. And this is very critical because if you think about it, a lot of companies, they're kind of stuck in their prices. They cannot really move around it. If they raise it for just a little bit, they will lose that customer and the customer will be searching for another product or another service. They'll just simply go somewhere else because they don't have to put up with you increasing your prices. They have many other options. Take, for example, your pest control company. If you're used to paying $60 or $70 a month and all of a sudden next month your bill is $100, you're simply going to cut off the service, call your local other, pest control company and say, hey, can you give me a better deal? And most likely you'll get a better deal and that company loses your business. So you want to pick companies that are scalable, growing, and able to increase their prices. The good example of that is Apple. Have you ever driven by an Apple store and seen it where it was empty and the employees are just roaming around and they don't know what to do? Probably not. Everywhere you go, you have people lined up. If not outside, you're going to have the store packed inside, filled with people all the time. And it does not matter what the price is. It does not matter what kind of product they come up with. People are going to line up for that company. And if you look historically, it's pretty funny and interesting where you can see the price of an iPhone. Even though it's the exact same device, they have different features or different upgrades. But if you look at the price of that specific iPhone that they come up with, it started at like $500, $600, and over time they kept increasing the price, even though it was a little by little. They increased the price little by little, year over year. And now the iPhone is $1,000 and we don't even see it as a weird or a crazy number where you pay $1,000 for a phone. Not only people don't see it crazy, but people actually line up outside waiting for the release of that iPhone. So whatever the next iPhone is, 14, 15, whatever it is, I can't keep up with them. But whatever that next generation iPhone that comes out, you'll see people drive by an Apple store. They're lined up outside waiting to purchase that even though it cost $1,000. So those type of companies where they can grow and scale and at the same time increase their prices, and their customers are more than happy to pay for those services and products because they simply love the company and they think they can't get a better deal somewhere else. So they're more than happy to put up with the price increase. Another investment that have always been seen historically to be a hedge against inflation is real estate. And as you can see, just like how the price has gone up of everything. So if you think about the construction, if you think about the lumber, if you think about, the paint, anything that goes into a real estate, the prices has gone up significantly during the high inflation that we're in right now. And because of that, you also have high demand, low supply that we have for houses that are being built. And in return, you have higher prices for the real estate. So if you're owning a real estate currently, you're happy because the price of the real estate has gone up significantly. And at the same time, if you're getting a rental out of the real estate, so if you hold the real estate and you're getting rental income out of it, that rental income is going to offset the inflation that you're being hit with, the other type of income or savings that you have on the side. So that's why real estate has been seen historically as a hedge against inflation. And you can see why, because during high inflation, the price of the real estate goes up also. And last but not least, the best thing to do to protect against inflation is to invest into yourself. So you increase your talent, you increase some type of skill that you have, or get a new skill that you do not have, and invest into that where you can actually earn more money and outpace the inflation. That's the simplest and easiest way to do it because you don't really have to invest money that you don't have. You don't have to do something crazy or buy real estate. If you don't have any of that, all you have to do is develop a new skill, or you invest into yourself where you learn something new online or whatever it is, and then start making more money. So basically you're getting additional income to the regular income that you have, and that way you outpace the inflation. So you're not stuck with the same amount of money where your money is going down in value over time. You're getting additional income where you're actually investing even more and more and more, and you're outpace the inflation that you're being hit by. So these are the best tips that I can think of about how to invest during high inflation periods. My best suggestion is don't leave cash sitting on the side. Try to invest every single penny. Try to invest into yourself. Hedge against it in real estate or anything like that, and then you should be okay as far as the inflation goes. The lower the inflation, the better. If we're hit with high inflation, at least you have the tools to work against it. That was it for me today, guys. I hope that was helpful, and until next time.